Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. Pretty wild day out there today, and I was taking a day off. I only traded for the first 23 minutes of the day today, then I was done. So as far as what moves were caused by what tweets or what reactions, I don't have the same firm grasp on everything tick for tick that I normally do. But just looking at the 5-minute time frame, I would say that this is a really good example of what the S&P 500 has been doing for the last decade. We see a dump. We see a lot of fear. Uh-oh, we're going to crash. The economy is going to blow up, bubble, blah, 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 and then just this slow grind back to higher highs. And if you were to put that out on a big scale, I mean, that's December. That's the December dump that we saw happen. And there's so many examples on the daily and weekly time frame that you could look at. And this is an example on the microcosm 5-minute time frame of the exact same thing playing out. So we hit the all-time high today in the S&P 500, and we didn't get a huge follow-through move, but it's an all-time high. And as soon as we broke the high of the August range, that's really the next level that we were looking at. So from here, any consolidation above our benchmark level of 295.97 keeps the bulls in full control. It's a doji. Doji at the top of an uptrend is a potential bearish reversal candlestick. What's more important to me than the shape of the daily candlestick is what is the hourly trend telling us. Because again, this is a broader view, a simplistic view, and I can zoom in and get more details. Do we have the hourly uptrend remaining intact? The low of today, 341, was an hourly higher low. At the end of the day, we still held that level. That lower wick happened after hours. We're not counting that. The low of the day, or the low of the afternoon, was 301.13. So as far as I'm concerned, yes, we're looking a little toppy, but we still have an hourly uptrend. If we break the low of today tomorrow, then we lose the hourly uptrend. We zoom out to the daily chart, and we look to see, can the bulls form a daily higher low compared to 295.97? Congrats to the bulls. They're in complete control. This is the highest the S&P 500 has ever been in the history of forever, regardless of the China trade war, regardless of the weakening economy, regardless of the debt bubble. Again, I loved what someone said on social media recently. I'm learning that being bearish the economy and being bearish the market are two different things. And I could not agree with that statement more. I don't view this market or this chart having anything to do with the economy, and that's what keeps it simple for me. I view this as just its own thing. You could tell me this is jelly beans, the price of jelly beans, and I would be trading it the same way. So blocking everything else out except for what matters right here, right now, which is the price. That is the only thing that matters. Bulls want the price to be up in the future. Bears want the price to be down in the future. The price right now is what matters. IWM. Looking a little toppy. So in the video yesterday, I talked about the potential play for TZA, which would be bearish small caps. It's a leveraged ETF. And I looked at the potential of a bearish biotech sector play because both were very overextended. You look at IWM heading into today, and we hardly saw any hourly consolidation for 2 days. And we started the morning with a nice little pullback. So there was a bit of an opportunity there. If we look at TZA from the open, we started, the low of the day was 42.72, and we went up a solid, let's see exactly how much. Solid 3% move. So again, don't have to nail the bottom, don't have to nail the top. If you get 1% of that move, that's a really nice trade. We then hit a new low of the day, and then from there was another 4% opportunity. So great volatility in both directions, and I will be keeping an eye on TZA and LABD again. I chose to trade LABD in my 23 minutes of trading today. We'll go over that in a second. But the play for TZA is going to be watching tomorrow. Can the bulls hold 42.14? And break 43.17 to change the hourly trend and to look for this daily bounce to have a bit more follow through. We would just be looking for a daily lower high, absolutely, but it could be a potential day trade to be watching for. QQQ, bearish reversal candlestick on the daily time frame. Have we lost the hourly uptrend? I would say yes, because we hit a new low of the day. Well, let's see. These wicks are throwing us off here. 193.15, and the low of the day before that was 192.97. So same thing as SPY. We haven't broken the hourly uptrend yet. We're on the verge of doing so. We have the high of the day, low of the day, lower high, and still holding a higher low with where we reached. If we have a bear break tomorrow and lose the hourly uptrend, we're looking for a daily higher low compared to 188.91, and the gap will fill at 192.53. High is up at 195.55, so we did not get a new all-time high in the tech sector. Came within about 1% or less than that, pretty much a 0.5% or less, but not there quite yet. That's worth noting. If QQQ were to lose the daily uptrend without breaking a new all-time high, that would make me much more cautious in the S&P 500 than if we do get that all-time high. XLF is continuing its strong march. We're due for consolidation here, so just keeping an eye out for it. We've seen a higher low every single day for 7 days in a row. I would not be surprised to see some profit taking in the financial sector heading into the FOMC. There's a lot of bulls that have made a lot of money in the last 7 days, and I would anticipate that taking some profit off the table for some protection heading into the FOMC is probably going to take place. So 28.72 is the most important resistance level from here. The hourly uptrend is still intact with the low at the end of the day as our hourly higher low, which was down at 28.26. Lose the hourly uptrend, definitely looking for a daily higher low to form because anything above 26.41 is a daily higher low. But watching for profit taking with 3.5 trading days left before the FOMC. XLV profit taking already started today. We did break 92.17, which was the highest August bounce that we saw, highest level. But we rolled over and saw profit taking into the end of the day. The hourly higher low was 91.59, and we did lose the hourly uptrend only by a couple pennies, but that hourly lower high and lower low is standing out because the other sectors have not seen that yet. So if we break the low of today, tomorrow, we're looking for a daily higher low to form compared to 89.02. And that's that. Democratic debate is tonight, I believe. Going to keep an eye on it if you're trading the biotech and healthcare sector just because we know they're probably going to be talking about it and there's potential to have some impact. Although I do still think it's a bit early as the election is 14 months away. I think we would have to see polls that have more meaning, maybe when we're 6 months out, for it to have meaningful impact. The VIX keeps dropping. So fear in the market certainly subsiding. No clear levels. 1370 is what I'm looking at next. But what I care more about than levels that we could head to is just the lower highs, because I want to know, is fear continuing to set lower highs and lower lows in this market? So anything under 1650 is just a lower high, keeping the bears in control of the volatility index. Gold, huge spike this morning, and then gave it all back. Volatility was through the roof. Bull flag on the hourly exploded the price, and then just a dump. So where we stand from here after all that volatility, I would look for a 4-hour equilibrium. I'm going to be looking at a range, pretty much just looking at it like this, with our low, high, scouting the higher low, and if the bulls show up into tomorrow or tomorrow morning, we're going to be looking for a lower high to form and for this 4-hour range to tighten. The daily time frame has a big upper wick. That may be our daily lower high. And if we were to roll over and break to the low, we would then be in a daily downtrend. At this point, we have lost the daily uptrend. We have not seen a lower high and lower low. This pullback came right from the high, which you could consider a double top, but a lower high and lower low would tell us that the weekly higher low has not been formed yet. Could be lining up for the weekly higher low in precious metals. If we have a bullish reaction to the FOMC, that would be about the amount of healthy consolidation I would anticipate. That still looks like a healthy weekly trend, so the bulls are hoping that that FOMC reaction can be a catalyst for the weekly higher low to be set. Silver, same thing. 4-hour time frame, gave it all back. If we bounce, we're going to look for a lower high compared to 1845 on the 4-hour time frame. Daily chart, lower high at 1845. And if we roll over and break 1776, further weekly consolidation will be underway. So the miners were all over the place. NUGT with a gap up open and then just dumped. So the bear miners had a nice play today. There's their 15-minute lower high and lower low. So a bottom fishing play, if we're looking at Dust had a bottom fishing play where we had the low of the day, bull move, higher low, and then the higher high. And whether you're playing that higher low and bottom fishing and stopping out if 690 breaks or entering on a bull break of the new high of the day, either one of those plays resulted in very solid profits and increasing bull volume into the end of the day. think I skipped the biotech sector. I didn't. So how did I play the biotech sector today? And I did skip it. So the biotech sector was extremely overdone. And I talked about it in the video yesterday how I would love to see a gap up open and look to short it. So the high of yesterday was 83.56. We opened at 83.60. It's only a 4-cent gap up, but that's what I was looking for. I cannot stress enough how important it is to eliminate a lot of factors in trading. What I mean by that is I'm not heading into the morning and saying, okay, do I want to trade this name bullish, this name bearish? I already have, from doing these videos, I have a rough outline of what I'm looking for. And as soon as I say, that's the setup that I want, that's the trade that has to come to me. And if that setup and that trade does not come to me, I don't trade it. And I maybe don't trade for the day. So I know there's a lot of traders when they're starting out who are going through and scanning. And not to say that this doesn't work for some people, but they go and they scan and they find 15 tickers that they've never watched trade before. And they try and get a sense of what's going to happen, as opposed to, I know what the biotech sector is doing. I've been watching it go up for 2 days. I know we're overextended. And I know that if I'm going to make a trade, I want a bearish entry looking for a healthy pullback on the biotech sector, which hasn't consolidated on the hourly. I'm just looking for hourly consolidation. And so I head into the morning saying, I'm looking for that setup. And that keeps me focused, laser focused. I'm watching XBI. I'm looking for a good risk to reward setup that I want to make an entry on. And I'm going to enter LABD. And if that trade doesn't work out, I'm going to get stopped out for a small loss. Maybe that means I'm done for the day, unless there's something else that I have been prepared for that I am waiting on. So I don't head into the morning not knowing if I'm playing bullish or bearish. I know what I want, and then I just have to see the setup that dictates that. So looking at XBI, first thing this morning, I saw the open, and I knew I wasn't going to be trading much today, but I said, I want a bear entry on this play. We pulled back first thing in the first 2 minutes, we flushed. And I said, oh man, I missed that. I didn't get a good entry. They gave us a second chance. There's your top fishing play right there. So I was trading LABD. Trying to remember my exact order entry. 1967. So we had our bull move. I missed that initial move. I got a second chance. I entered at 1967. I put my stop below the low of the day of 1947. So I'm risking 21 cents. And if we hit a new high of the day, my trade works out and I'm a winner. So 21 cent risk. And to get the new high of the day, if we break that high of the day, I will then be up, let's see, at that point, 67, 77, 87, 25 cents. So new high of the day, up 25 cents. And I'm going for more than that. I'm just not looking for the new high of the day. And I'm looking for my reward to be bigger than my risk. So potentially looking for, if I'm looking for 42 cents up, that means my risk to reward is 2 to 1. Or reward to risk is 2 to 1. So I ended up selling a position for a day and a half maker. I sold the position for a day and a half maker at 20, in the 20 teens. Just about 40 cents up. A little more than that, 45, 50 cents up. And that was that. There's my day maker. And I closed the computer and I went to do other things because today's my day off and I don't want to trade all day. Could I have made more money if I stuck with it and managed this trade and babysat it? Yes, because the price kept going up. But I didn't want to, so I didn't. And that's just hitting your day level, 23 minutes into the day, done, close it down, see you tomorrow. And if we're doing this for a decade or more, that's the way that we have to treat this to stay sane. Forget where I left off now. We did silver, we did dust, let's go oil. So oil lost the daily uptrend, and we're now in a choppy territory. The daily uptrend is not clear, the weekly trend. You could say that we broke a bunch of resistance, which we did. We got to the 5-6 week highs, but we didn't break this level of 58.79. We pretty much double topped at that level by 5 pennies. So now we have a double top of that resistance level, and the bulls really want to hold 52.82. If 52.82 were to break, that's going to be the lowest price that we've seen in a month, and that's obviously going to be a significant shift in momentum. So the fact that oil has not broken bullish while the S&P 500 has clearly broken bullish, little bit of a red flag, and it will be keeping me on watch for the potential of this weekly equilibrium breaking bearish and a potential prolonged bear play on oil. Monthly time frame, we have our high, low of the December dump, lower high, higher low, lower high, higher low. And that may be a new lower high. And we'll be in a monthly downtrend for the first time. When's the last time we were in a monthly downtrend on oil? It was back in 2015 into 2016. We've been in a monthly uptrend since then. You could say we lost the uptrend here, but we haven't seen a monthly lower high and lower low is the bottom line. That hasn't happened since 2015, 4 years. So you better believe that if we get a bear break, I'm going to want a piece of that trade because, again, it's similar to gold. Gold was in a 2-year monthly equilibrium that broke bull. Everybody was watching it. There is potential that if oil gets this bear break, with everybody watching this pattern itself has only been playing out for a year, but it'll be the first time in 4 years that this has occurred. And if that bear break occurs, where's the next support? After 50.51, 42.34 is the next monthly support. And that's pretty much the next weekly support as well. There's just a lack of support there. So we'll see if the bears can punch it through. Let's see if there's a potential bigger picture catalyst, fundamentally speaking, whether it's, making a deal with Iran, whatever it could be, that could give us that break. But as far as the short-term action goes, 4-hour time frame, clear downtrend, another weak bounce where anything under 56.33 is just a lower high. If we change the 4-hour trend, we'll just look for a daily bounce to set a daily lower high. Natural gas daily high or low is trying to form. First question I have on a commodity when I'm wondering, is the daily high or low set? Has the 4-hour trend changed? The answer is no. So it's not official that our 4-hour trend has changed, so I'm not really confident the daily high or low has been set. I need a 4-hour higher low and higher high to be looking back to test our recent highs. But you better believe that after a monster run like that, there's bulls looking to buy for this potential trend to continue, and it won't be a red flag for the long natural gas bulls unless we fail to break 2644 and then come down and break 250. 250, our previous resistance, now support, is now our must-hold level, and this is a daily bull flag. If this follows through, bull flag confirmed. If we break 250, bull flag is no longer the scenario. So again, when I'm looking at consolidation, I'm always gauging, is it consolidation that's likely to lead to continuation, or is it consolidation that's likely to lead to a tightening range? And right now, this is consolidation likely to lead to continuation, and if we lose 250, that will change my perspective. The likely continuation will then shift to a likely tightening range on the daily if we break 250 from here. So nice dip buying, and we'll see if we get follow through. We had that inventory report today as well, which was definitely a factor. Forgot that. Let's see, 10:30, bull reaction, gave it all back, regained it all. A lot of volatility. Man, I love the volatility in these commodities these days. Enjoy it while it lasts. Commodities were a snooze for a long time, and these leveraged ETFs certainly give great percentage moves in either direction. And again, if these ETFs, these 3 times leveraged ETFs, are going 5%, 6%, 7% in a day, we don't have to nail that entire 6%. Give me my 1 to 2%, and if I can do that a bunch of days in a month, it's going to be a good month. So thanks for tuning in. Hope you're well. Do good things. We'll end it here with some guzheng playing that I've been messing around with, a Chinese string instrument, and we'll see you over the weekend.